Hello financial investors and welcome to the channel. My name is Brent and today we are going to be doing our Monday buys video over on M1 Finance within the Roth IRA. We're going to go ahead and take a look. Currently up on the screen, stock futures are currently green. We're then going to go ahead and jump into the M1 Finance portfolio, take a look at what positions moved up or down during the past week. Also take a look at what stocks paid out dividends, the performance of some of our stock buys last week. Looks like some of the companies opened up some new opportunities, and I am planning on making one of the riskier moves that I've made in the in the time frame of the last 2 years or so. But I believe if this can, if the economy here, as it says, that they're showing some signs of potential recovery as the current situation is beginning to slow down in some parts of the world, and President Trump is trying to get things back in store, getting the economy back to working order. I believe that if we do make a move here in the short term, it could be considered very high risk, but if it plays out, it should do well into the future. So with that said, if you are brand new to my channel, have not yet subscribed, definitely hit that subscribe button below. If you do enjoy this video, find it helpful, entertaining, definitely give this video a thumbs up. And of course, if you have any questions or comments at any time during the video, whether it's about the video, the stock market, dividends, drop it into the comment section below. I do read and reply to all your comments. And let's go ahead and get into the video. So currently I'm taking a look at stock futures. Futures started to rise yesterday, I believe, or this morning when I was taking a look at them. Some of the Discord channel had been discussing why are stock futures rising. Well, there was an announcement by President Trump that he's really pushing for the current state of the economy to reopen. There have been cases where it is beginning to slow down. They're not showing. It's not, we're hitting that curve. And while we still need to practice social distancing, he wants to have some of the smaller mid-cap businesses, some of the malls be able to open up. There are going to be people who are going to want to avoid those locations, potentially because they are higher risk. But for the most part, some of the stores will still be staffed, and we may see some of the economy begin to open up. And that's kind of short term. It's has upside potential. If we are not able to stick to that schedule, or if we move towards it, and then such as South Korea, we start to see a increase in the current environment, increase of spreading and such, that may backfire, and then we'll have to close, and that could get extended, and that could be negative signs for the upcoming weeks or months in the market. So it's really hard to tell exactly what will happen, because we really don't know what the future will hold, especially with what's kind of going on and how fast this thing proceeds. I was kind of reading an article on how someone was infected and contagious for 42 days without showing any symptoms. It wasn't until they had a plasma transfusion that the status began to clear up and they were no longer contagious. So it's a crazy, crazy time. But let's go ahead and get into the portfolio now. So Monday, it looks like it's going to be opening up green, just in high hopes of what's kind of going on. The economy is trying to get back into the motion. We'll kind of see how it plays out for the rest of the Monday day and for the week. Let me know in the comment section below, do you think this week coming up for April 6th through the 10th will be positive or negative? Go ahead and drop a comment down there and let me know. Okay, so let's go ahead and take a look here at the Roth IRA. Before we go into the performance, let's go ahead and cover what stocks were purchased this last week. So let's go ahead and go into the activity, and we go into our 5 buys. Now, I'm going to go ahead and screen capture this, that way I kind of make my notes here on the left. But on Monday, during the normal routine of buying stocks on Mondays, we picked up $200 worth of Cisco's. We picked up $400 of Cisco Corporation. I didn't want to invest the whole amount just because I wanted to be able to dollar cost average, but I felt it was a good buying opportunity where I could pick up roughly $400, and I'd still have another $500 that I could kind of average into it if it did pull back. Main Street Capital, I've been kind of averaging a bit more into this one on a weekly basis. ABM Industries and Eaton Vance. I didn't buy Realty Income this past week just because it had popped up positive in the portfolio, and I felt that just give it some time, it may pull back. So let's go ahead and go into what stocks paid out dividends last week. So last week we had a number of stocks pay out dividends, as we can kind of see here on the right hand side. So starting with Digital Realty Trust, we were paid $4.14, followed by Lancaster Colony, only some 59 cents there. We have Waco Group, $5.04. We have the Genuine Parts Company paying out $1.68. We also have UGI, this is the nice utility company, paying out a nice $1.32. And we had Kimberly Clark paying out $4.65, giving us a total dividend payout within the week of $17.42. And then I do add equity on Fridays now. That way it is available for me on Mondays in order to begin dollar cost averaging. So we do now have a good portion of equity here within the cash balance. We have about $1,000.41 to invest, $1,041.76 to invest in this current market. Now I'm not going to be adding it all into the market here today. Just because I do not know what the future will hold, I just kind of continuously dollar cost average into the market. If we do trace back to the 23rd of March lows, where the total market was down roughly 30%, then it'll definitely appear to be a better buying opportunity versus where we are currently at. Now, if we take a look at the 1 week performance of the portfolio, we're down roughly 3.24%. Now, if we compare this to, say, the S&P 500 weekly performance, let's go ahead and bring this up. The S&P 500 was down roughly 2.08. The Dow Jones and the NASDAQ were down 2.7% for the Dow Jones, and the NASDAQ was down roughly 1.72. So, for the week, we did actually fall just a bit harder. And if we go ahead and swap to our gain and loss, we can see that our biggest losers here are our real estate investment trust. Every single one of our REITs got slammed, starting with Tanger Factory Outlet. This one has lost about 70 to 80% of its equity value in the company just within the past month alone. It seems, it's been trending down year to date for quite a while. And now with all of their stores being completely closed, all the malls being closed, social distancing in order, and all the non-essential companies just being closed, the mall REITs are getting hammered and destroyed during this time frame. This is actually one that I am considering buying today, and it's a very high risk position. And I have a couple articles that kind of go over what has been currently discussed going into 2020 and what sort of movement they've done recently. That they have said that they are going to be paying out the May dividend, and then there is no current news as far as the upcoming dividends for the year. I think they're just kind of playing it also by how the future kind of holds for this company. Next, we have Main Street Capital down 26.9%, giving us a nice opportunity to continue to dollar cost average. Realty Income last week, check that out, down 23.03%. So last week I didn't invest in it because it had gone positive by roughly 3 to 5%. Well, now it's back down 23%, putting it back into the negative in the portfolio, giving me the opportunity to once again dollar cost average, adding more equity into that, just buying up more shares. Simon Property Group, another mall REIT, Essex Property Trust, and WP Carey. So all my REITs here, pretty heavy within REITs, got slammed this past week. Cisco recently added position into the portfolio. I added $400. That way I could continue to dollar cost average into this one, down about 15% on the week. This gives me an opportunity to buy more Cisco. I do believe it went ex-dividend this past week, but we'll check that out here in just a second. We also have Waco, Southern Company, Las Vegas Sands, Genuine Parts. So it does seem like we have quite a bit more negative versus positive. There's one that we recently bought, Eaton Vance, down 7% on the week. If we take a look, we also bought Cisco. Cisco was positive last week, up 0.87. We had purchased ABM Industries, maybe it's down here, up 3.84 last week. We also had picked up, what was the other one? No, that was it. We saw Cisco was positive. Cisco Systems was positive. ABM Industries was positive. Eaton Vance was negative just slightly. Where is it here? Right there, down 7%. And then we had Main Street Capital, pretty hard hit. And what was the... I think that was it. And Cisco Corporation, the food, right there, down 15%. This one got hit the hardest. So those are our stock buys. And those are kind of shown down here in the spreadsheet here. I kind of track all my buys. So Cisco, since purchasing it, it does look like this is showing it as down 2.01%. That is probably the correct, because Cisco went ex-dividend, I believe, on, when was it? So we made dividends last week. If we look at the 1 week performance, based on the amount of shares that we hold of Cisco Systems, last week we held it to the ex-dividend and we earned $6.59 getting paid out to us in the future. That is why it is showing up positive for the week, just because we have earned those dividends. They have just not been paid to our portfolio. And if we look at the other position here, Cisco Systems down 15.9%. That's pretty on the spot. Main Street Capital, that's pretty on the spot, down 22.69. ABM was positive last week, about 1.06, and Eaton Vance was down roughly 7%. So all that is showing the correct data. So really the only stock last week that kind of held its own was ABM Industries. Now, in the past, you can see here that even in the past time, Realty Income is now back slightly below where I originally purchased that. So this is another buying opportunity for me, where I can just buy a bit more Realty Income and continue to average into that position. So I am actually interested in a few positions. I'm interested in continuing to dollar cost average into the Cisco Corporation. I'm interested in dollar cost averaging into Realty Income. And the other position that's a bit more high risk that I wanted to average into is Tanger Factory Outlet, and that is ticker symbol SKT. I don't actually want to put 400. I just want to add roughly $200 more at this current price. It is very high risk, because if we take a look here, this one is, my yield is 8.98%. That's a pretty high yield in itself. But currently they are offering a 33.57% starting yield, and that is not guaranteed. The 8.98 is guaranteed for this upcoming payout in May. Once this pays out, depending on how the future holds out, they may or may not suspend their dividend if they get some sort of a payout. I don't believe they will do that, and we'll kind of cover that here in just a second. Now, this company has grown and paid out dividends for the past 27 years. They have a very low payout ratio, but again, this is not accurate for real estate investment trust. We would have to look at their funds from operation and their payout to their shareholders. But we'll go ahead and cover a quick article here covering Tanger Factory Outlet, ticker symbol SKT, and then we'll kind of go into a second article here. So Tanger is still going to continuing to pay their dividend in May. So here they recently announced back on the 31st of March that this company, they went into 2020 at a really good balance sheet. The company has noted as it entered 2020 with one of the strongest balance sheets in our peer group between all the other mall real estate investment trusts. They were the top of the line with no borrowing outstanding under their current lines of credit. So that's where they were at going into 2020, not really expecting what's currently going on, where the government has shut all the malls down and all the small non-essential businesses. They do intend to continue, they do intend to pay out their quarter one dividend. That is going ex-dividend here in April and it's going to get paid out in May. Now, covering another article here that is also kind of published here also on the 31st, they kind of reiterate what they've kind of said, how they entered the financial year of 2020 with one of their strongest balance sheets. Now, during this time, they have taken a drawdown of basically its max capacity. They've borrowed roughly $600 million of unsecured lines of credit, and this company has also taken steps to reduce cash outflows, including the reduction of deferral of certain operating and general and administrative expenses. So maybe they've closed down all their stores, they've kind of laid off their employee. They don't have any employees. They own the stores, the outlets within the malls. Places that rent for them are AT&T. Maybe there's some cruise lines, and a lot of stuff goes on in the mall. There's really strong companies that rent those facilities within the mall in order to do their business from there. So I don't have that list on hand, but they kind of go through how they borrowed, and $600 million is quite a bit of borrowing for SKT. If we go ahead and punch in SKT here and we look at their common stock payout, this company pays out anywhere from, I believe it's actually $30 million per payout cycle. So every quarter they pay out roughly anywhere from $20 to $30 million for the common stock payout. Now, they borrowed $600 million of unsecured lines of credit. So they could potentially use this capital to pay out their shareholders in May, depending on how the economy begins to, are they reopening business for the non-essentials? How is the flow of traffic looking? Is rent still going to be collected from these outlets to the main REIT here, the owner? That'll all kind of get played out. And we don't really know the future of this one, but it's going to definitely be a riskier investment. So I'm not going to be putting a whole lot more capital into this one, but I figure $200 on this one at this time, where it is trading for $4.26, where my cost basis is $15.92. It has $800, which in itself isn't too much capital to be invested. If I had a larger portfolio, I wouldn't mind just throwing $800 at this position. More capital within this account to allow itself to, but that way it would nullify 50% of the loss. It would go from a loss of 73% to, anywhere from about 30 to 45% loss there. So I don't know if we can actually do the math on this, but that's not important. I'll probably do that at another time offline. So Tanger Factory Outlet, I want to go ahead, and I just want to go ahead and just put $200 right now. Just kind of get it out of the way. I don't know how much further lower it will get. They've already been affected pretty negatively as it is. Their stock is also very volatile, moving up and down, very rough. If I were to show this one here on the charts, so this is the 1 week performance here. Over the past week, they went down, starting at the beginning of the week, 25.41%. Then at their lows at $4.11, they rose roughly 20% before falling once again 17%. So right now they're trading near their all-time lows of $4.05. They're very close to that. I'm not sure how much further they would actually get to their lows or even break below their lows if whatever takes place here. So they may be doing I don't want to go into what they may do, but we'll kind of see how this plays out. It is a bit of a riskier investment there. Okay, so with that one out of the way, we also wanted to continue averaging into realty income. We're basically back in the negative. If we take a look at realty income, the overall company is now down roughly 5% in the portfolio. So that's another opportunity for me. I'm going to go ahead, and realty income is going ex-dividend here in the future. Let's go ahead and see. I believe it goes ex-dividend in the middle of the month. So every month around the 19th, I believe, is when they go ex-dividend. Towards the end of the month. So the very last date of the month. So recently they just went ex-dividend then on the 31st. So last week on Friday, I believe. So this one won't go ex-dividend for about, a couple another days, but it's still an opportunity to buy, especially when it's down roughly 5%. So I'm going to go ahead and I will do another $150 towards realty income. And there was another one. Cisco Corporation. That one is down 15% in the portfolio. I'm going to go ahead and add another $200 to this one. So Cisco right here. It went from offering me a 3.83% starting yield to now offering a 4.56% starting yield. So I'm going to go ahead and put $200 additionally into this one. And let's see, what other company was down last week that I had kind of set to the side? There were a few other positions I recently added into my watch list. Main Street Capital is still getting hammered here. Maybe how much do I have to put into Main? So I'll put 50 into Main, and that gives me currently $600. And thought there was one more I had. Oil started popping just a bit. I'll add $100 into oil. Eaton Vance, I think they were a bit negative more than that last week. We'll kind of let that one sit for the time being. Let's go back over to M1 and take a look at the portfolio. There was one other position within the 1 week that I had wanted to look at. That was, McDonald's. McDonald's was down 2.25. It is overall down in the portfolio 22.33%. I'm not sure why it's not over in my list, but it definitely should be a stock that I want to buy. So McDonald's here should be, let's go ahead and sort this. And I guess, I don't know why I should sort it by names. Oh boy, that broke that. Okay. Right there. McDonald's. Negative currently, about 10.54%. Probably will add $100 right now, but I want to eventually add $400. So that is what I currently want to buy at this time. We're buying a bit more at this time, and then we'll kind of go back to our normal schedule of just investing $115.38. And then depending on how this next month kind of plays out, will businesses begin to reopen? Will we fall a bit further and harder than we have recently? Then at that time, we'll kind of readjust. And if I need to add more equity into the portfolio, we have we have the opportunity to do that. But if we begin to rebound, then I'll just go into my normal routine of the $115.38, or maybe readjust that based on the amount of equity that I have remaining for the year, divided by the number of weeks that I have remaining in 2020 to invest, and then we'll go that route. So these are the companies that we're going to be buying today. We are going to be buying $100 of Chevron, $50 of Main Street Capital, $150 of Realty Income, $200 of Cisco Corporation, $200 of Tanger Factory Outlet, and $100 of McDonald's. So here, we're going to go ahead and sort this by our worst positions there. Simon Property Group down 94%, followed right behind by Main Street Capital down 92.84. Those don't seem like accurate numbers. So ticker symbol CVX right there. Buy sell, we're going to go ahead and put in $100. Continue and confirm. We are also going to go ahead and check out Main Street Capital, which is up at the top. Main Street Capital. Buy and sell, and we're going to go ahead and put in $50 into Main Street Capital and confirm. And done. We're then going to go to Realty Income, which should be, it's not negative by a whole lot. There it is. Hit buy sell, and we're going to go ahead and put $150 into Realty Income, confirm and buy. We're then going to go ahead and get Cisco, which is in the 15% down range right there, and buy sell. We're going to go ahead and put another $200 into this one and confirm and buy. And then we have two more left. We have Tanger Factory Outlet. I'm actually surprised Tanger Factory Outlet is not down at the worst. You know, it's lost a lot of equity but the company's still there. It's not going anywhere right now. And depending on how the future kind of plays out for this company, we shall see how this, how this investment turns out in the future. We may be looking back at this in a year and going, man, that's crazy that I bought Tanger Factory Outlet at that $4 range. And then McDonald's should be right there, down 22.33. And McDonald's, we're going to go ahead and do $100. Okay, so we have roughly $241 remaining in this account. Depending on how this week goes, maybe if there's a big negative day of 10-15%, that would be a good opportunity to use the rest of the capital within the portfolio, and then we'll have more capital in the portfolio added on Friday, and we'll kind of make some adjustments as needed then. So that is going to be it for today's video. What do you guys think of this week's buys? Do you believe any of these are crazy investments? Tanger Factory Outlet is probably the craziest one within the list, but just about every other one I think is a good buying opportunity for myself as in this portfolio: Chevron, McDonald's, Realty Income, Cisco Corporations, and Main Street Capital Corporation. So that is going to be it for today's video. Let's go ahead and see how Monday plays out. And that is it. If you have enjoyed this video, definitely give this video a thumbs up. If you haven't subscribed to the channel yet, definitely subscribe to the channel. And if you have any comments or questions, want to let me know what stocks you are buying, or have any opinions on the stocks that we are purchasing here on Monday, definitely drop it into the comment section below. And that is it. Thank you all for tuning in. I will see you next time. Have a great day. Bye.